Now, looking at the global trend, we've seen rising U.S. Treasury bills mounting a considerable, pressure on emerging and frontier market assets. And, of course, the U.S. Fed signaling an interest rate hike. Now, don't you think that this might actually be a reason for the CBN to perhaps decide to maintain status quo and be cautious?
No, it doesn't have anything to do. The U.S. Treasury bills doesn't have anything to do with us. The U.S. economy is doing nicely, and they're doing the economy based on their own fundamentals. We have to look into our own fundamentals and ask ourselves, we need inclusive growth. An economy that is growing at 2%, end of fourth quarter, that has now dropped to 1.9 is a cause for alarm. So you're looking at a rate cut of at least 100 basis points to be able to create the stimulus into the economy. Those economies you talk about, the rates that companies borrow in the U.S. is close to 2%, 3%, and that is why they've been able to sustain corporate earnings, corporate growth, and employment. So we need to do the same. We need to have inclusive growth in our economy. We need to get our people back to work. We need to get back to productivity, and we need to restore the distortions in our economy. For me, there is a non-negotiable economic in this, which is the fact that your GDP must at least match and at least slightly exceed your population growth. If you do not meet that basic benchmark, then you're in trouble. Your population is going to begin to become a liability instead of an asset.
Okay, now, but part of what the committee, of course, will consider is the development in the global economy. They can't just do without that. So looking at this global economy and, of course, the variables you have mentioned, what factor do you think will probably carry the highest weight?
For me, I mean, the factor that should carry the highest weight is how we're going to grow our Nigerian economy.
And forget about the global economy.
People. The global economy impacts us in a positive and negative way. What impact will the global economy now is stable. Oil prices are at an all-time high for us, so it's in our favor. And we can see that by the basis of our reserves. The American economy is stable in terms of its growth, and it's doing nicely. Their monetary policy is fine. Their fiscal policy is in good shape. Unemployment is in good shape also. The numbers are good. We don't have the same unemployment numbers. 25% of our people are not employed. Our companies are finding it difficult to borrow, at 17, 18, 19%. And our economy is not growing to meet our population rates. So we need to look inwards and begin to think that, the global economy and all those sort of indices and other issues, the foreign portfolio investors will always come and go. So we need to take a look at policies that will stimulate the growth in our economy, and we can have inclusive growth and begin to have people gainfully employed. That is really what the issues are, because apart from all these economic issues that we have some very chronic security issues with the Boko Haram problems in the northeast of Nigeria. The Fulani headsman clashes are very serious security issues that are undermining business confidence in the economy. So we really need to begin to look inwards. And don't forget that the reason why inflation has been stubbornly high over the last 2 years is because of the displaced people in the northeast of Nigeria, who under normal circumstances are very productive people who contribute to the agricultural GDP. Because of that crisis, and now the crisis in Benue, that is why you see food prices have been consistently high. So all those things are impacting the economy. And those are the issues I think we need to deal with to be able to get our economy back to growth.
Okay. Now there are 3 scenarios here. It's either they hold, or ease, or probably hike, but I think that is less possible. Now, can you paint a picture of what the risks to price stability, financial stability, and economic growth in the near term would be? Perhaps if the CBN decides to ease rate or probably hold or maybe high?
Well, let me put it this way. The markets have already reacted, and Treasury bill rates have gone down significantly from 18% to 10%. Interest rates have already come down from the commercial banks. And so clearly, the banks have already built some sort of anticipation into the pricing of their securities and also their products. And of course, the financial markets have responded accordingly. Now, the fact that you are seeing 1.9% growth has stalled. So we've seen a contraction in growth. The trajectory on growth is no longer positive, it's now negative. If that is not a signal for these MPC committee members to understand that we're looking at least a 50 basis point on interest rate cuts. At the minimum, I would look at 100 basis points cut easily. But at least we need to have at least a 50 basis point cut in growth. And I think that is really what will create the stimulus into our economy, because we are not getting the support from the monetary side.
Oh, well, but you know that the monetary side will not do it all alone. The fiscal policy has a lot to do. So are we beginning to see that alignment between the monetary policy and the fiscal authority?
Well, the positive on the monetary side is the fact that last year we had about 60% of our revenues going to debt service because of the high levels of yields, 18% rates on interest. From this budget and what you're seeing, that has come down to about 35–40%. So that is quite positive in terms of that. So the alignment within monetary and fiscal policy is there, but the government deficit, which has been crowding out private sector credit, is what is now being corrected. And now that we can have more capital available for private sector investments, we should be able to see that spur in growth. So yes, that alignment is there, but we need more implementation. It's not just about the economic recovery growth plan. The government now needs to come up with more policies, new policies now, to create stimulus in the economy to be able to restore the growth, because the growth that we've achieved by coming out of recession has been stalled. So serious new policies need to come out to be able to address the issue of growth.
All right, thank you very much for your time. Mr. Tilewa Adebajo, the CEO, CFG Advisory.